Contract accepted volumes from 2020 surpassed this year's volumes for the first time late last week. The intersection coming at a time when spot rates have started pulling down contractual costs. According to DAT, domestic contract rates are coming in about 57 cents a mile higher than spot rates. That's a 7 cent per mile decline from June on the contractual front and a 4 cent per mile drop in the spot market. Flatbed spot versus contract has been moving in parallel as opposed to its van counterpart, however, has started to follow a similar trend as Flatbed saw a 7 cent per mile deterioration in contract rates from June to July. An almost 10% drop in the overall housing starts, easing residential construction spending, a 5.4% decrease in existing home sales, and Fannie Mae's HPSI falling to levels not seen since 2011 are just a couple of reasons as to why those contracted rates for Flatbed are deteriorating. What seemed like a relatively quick return to normalcy for the fuel rack price halted back on August 9th and has been climbing ever since. Combine that with the continued decline in the retail diesel cost, and there goes your fuel margin spread between small and mega fleets. As of recent, an uptick in the rack cost has typically been a leading indicator of what's to come for the fuel price at the pump. Here's to hoping that that trend does not continue to repeat itself in the coming weeks. According to the official Port of LA Twitter handle, the port broke another all-time high import record in July, processing an estimated 935,000 TEUs, outpacing the previous record by 2.5%, which was set back in 2019. When asked why the port had seen such robust throughput, Gene Soroka, the executive director of the port, acknowledged the strength of the consumer over the past 2.5 years. However, did note that August imports will reflect the bearish feel of the market we've been experiencing over the past couple of months. Soroka made no mention of the loss of market share the port had been experiencing over the pandemic, however promoted the port's available terminal capacity as a solution for cargo owners experiencing increased dwell times domestically. Dwell times at the Port of LA have decreased 25% over the past month, according to Project 44, now down to 4.15 days. This has been your Bridge Logistics market update for the week of August 22nd, 2022.